Breaking news here on Martyn Lucas Investor. I've just made a purchase of Chevron oil. Oil is now going down. It's getting attractive, particularly CVX. I like it because of the dividend payout, $1.50 plus. It's a very good dividend on this one. This is not a full review, but I am going to show you why I bought it and have a quick look at the numbers. So if I share with you, first of all, my position, so you can see. Now, I was down about 30 or 40%. I don't know what I was down at the time. I forget now, but it was a heck of a lot. Then I was down 17%. Then I was down 10%. And now I'm down just 6.7. Not by the share price, not by the stock going up, by dollar cost averaging down. I bought when oil was too expensive and I kept buying and buying all the way down, and I've just done it again. So I'm only 6% down now. Now, the reason why I'm making this video today is ex-dividend date today. So it won't count today on my next, for the December payout. So I won't get this $1.50 plus dividend until March. However, that's why it's selling off today. Well, not just one of the reasons, but of course, ex-dividend date, when you've got such a high dividend and today is the day it's passed, because it won't settle until tomorrow, so it won't count. But that's why I bought some. So I was down just a few moments ago over 10%, and now I'm down 6.84. I bought another 10 shares. I've got 27 in total now. So oil is low now, and it's a good buy. And let me share with you very quickly, this is not a full review, but I will share with you the valuations. If we look at a best case scenario, which we're not in right now, we're undervalued by 57%. Base case, 21%. Well, we are certainly there now, 21%. And it was slightly better than that because on the bell it went down lower. So this was before the bell, so it's gone down slightly lower. So it's even better. Valuation is probably about 23 now. Undervaluation. That's good on the base case. The worst case scenario, 25%. It's actually about 23, and we are certainly not in the worst case scenario at all. And I'm always prepared to pay up to 25% for a good growth stock with a great balance sheet and minimum debt situation. So that was okay. That was a go for me. That's why I was there. That's why I used this software along with everything else. Historical profit 89%. It's a very good company. Possible value trap detected. Very, very important to announce this. Thank you very much. Gods for me just subscribed during my live video I'm making this. Possible value trap detected. A value trap occurs when a stock appears inexpensive based on fundamental analysis but fails to reach its intrinsic valuation over time, often due to underlying issues not reflected in quantitative data. So it's very, very important. Scrutinize beyond numbers. Assess long-term potential. That is what you need to look at. When I always talk about this, when you look at valuation, you need to look at other things. So I always do, okay? Now then, we look at the revenue, and we can look at the revenue. We know about the big purchase which is happening next year. So there's a bit of a downturn at the minute on revenue, a bit of investment going on. You can see, I'm not going to go into a full review of the stock. This isn't that. This is just a quick purchase and told you why I did it. Look at the balance sheet. This is the main reason. The assets is 264 billion, liabilities 98 billion. So we've got a very, very healthy balance sheet. We've got no concerns with Chevron at all. It's a top S&P contender. Well, it's not a contender, it's on there, but you know what I mean. When I use the word contender, I think of a fighter. You know what I mean? Long-term debt 20 billion. So it's got a big debt, but nothing in comparison to its balance sheet. As you can see, gross margins are just trimming off a little bit from where they've been, but still healthy. But this is the most important thing today. The profitability score is 57. It's not bad at all, and it's going to get better next year. So I know we're going to get an increased profitability next year, but this is still a good profit score. It's amber, just about turning green. You can just see it turning from amber to yellow to green. So that's pretty good. And solvency, the business is not going anywhere. 76, you don't get much higher than this. So it's a very good balance sheet, not going anywhere. Wall Street analysts give it 58% upside at the highest, 31% and 17 at the worst. So we like to have anything over 15%. Otherwise, you just buy the S&P. That's the worst case scenario. So to buy it down here with the reinvesting the dividends, we are going to improve on that. So I'm very, very happy. So there you go. I just bought some more Chevron to lower my average. My average is now lowered. I was out of the money big time on on oil. Now buying it, getting lower and lower and lower, and now I'm in a good position. It's going a bit lower. I don't know how low it will go to. I'm not that concerned, but I'm happy with it now where oil is. All right. So there we go. Just a quick review, not a full review. Just my thoughts on Chevron this morning. Click above my head for all my links and all my social links and my newsletter and all that great stuff. Also below in the description of the video, and more videos over here I think you'll like. As always, until next time, take care of yourselves and each other.